The volatility in the markets has been on the rise lately, and many traders are scrambling to find ways to capitalize on this trend. But what if you could actually predict and profit from market volatility? That's where the Bollinger Band strategy comes in, a powerful tool that helps you identify and trade volatility with ease. Developed by John Bollinger, this strategy uses a combination of moving averages and standard deviations to create a band that moves with the price action. By understanding how to interpret these bands, you can learn to trade volatility like a pro. So, let's dive into the parameters of the Bollinger Band strategy. For this example, we'll use a 20-period simple moving average and 2 standard deviations. This is a common setup that provides a good balance between sensitivity and reliability. To set up your Bollinger Bands, simply plot the 20-period moving average on your chart, and then add 2 lines above and below the moving average, each representing 1 standard deviation. By using this setup,